Welcome to Appetite for Disruption, the business and regulation of fintech, a podcast focused on engaging discussions about the fintech industry with leading participants and thinkers. With your host, Troy A. Paredes and Lee Schneider.
Hey everyone, it's Lee. Today, Troy and I welcome a panel of speakers on blockchain technology. These are three different people who, through their companies, have gotten involved in blockchain and crypto assets in different ways. It's interesting to hear their different complementary perspectives because each of them came from a capital markets background and is now looking at crypto assets as a new asset class and trying to figure out ways that they can participate best. It's a really engaging discussion, and we learn a lot from each of their perspectives. We hope you enjoy the listen. Today, we have a very special panel of three terrific people who are doing cool things in and around the blockchain and crypto space. We've got Christine Sandler, Joel Revel, and Anton Katz. I would love for each of you to introduce yourselves, tell us where you're working and what you're doing. Christine, why don't we start with you?
Thanks, Lee. I'm Christine Sandler, and I am head of sales and marketing for Fidelity Digital Assets, and we provide custody and execution services for institutions that are in cryptocurrency.
Great. And Anton?
Thanks for having us. My name is Anton Katz. I'm the co-founder and the CEO of Talos Trading. And Talos is a bilateral trading platform. So we provide trading services for large institutions. We're really the infrastructure provider for institutions that trade digital assets and FX.
Great. And Joel?
Yeah, thank you. It's great to be here. Appreciate you having us. I'm Joel Revel. I'm co-founder and CEO of Two Ocean Trust. We provide wealth management services to high net worth individuals, family offices, and advisors, full range of investment, trust, and estate capabilities, including a comprehensive wealth management platform that seamlessly bridges between traditional and digital assets.
So, boy, you guys are all doing something slightly different in the crypto and blockchain space. Why don't we start out by hearing from each of you what made you choose this space to be in?
Well, I think, so first of all, my background is actually in capital markets, and that's also the background for the majority of the people on our team at Talos. We spent about 14 years in the capital markets so far. And really over the past 6 years, I've seen a brand new asset class starting to emerge. And really with all the signs of a true asset class, much like, the traditional asset class, like foreign exchange, like equities, like fixed income. And as an engineer in financial markets, we never really thought that that's going to ever happen again. Like we didn't think that we were going to see a brand new asset class, starting in our lifetime. So it became one of the more interesting things to get involved with. We've built a lot of the platforms out there in capital markets that allow banks and larger institutions to trade multiple asset classes. And so this is kind of like a fascinating domain to be involved with. We usually in capital markets, we kind of focus on optimization, on smaller changes, and really kind of like making the asset classes better. Here, we get to play a pretty pivotal role in a brand new asset class and the evolution of that asset class. So that was kind of like the primary reason why I personally got involved with digital assets. My background is also in computer science and cryptography, which naturally has some relationship with the evolution of this asset class. So that was kind of like, that's probably the major reason why we find ourselves. And then the second thing I would mention is that we see a lot of similarities in this asset class and the way it's evolving with the evolution and especially electronification of other asset classes. So when there was a direct liquidity being established in foreign exchange, our previous companies played a pretty big role there. And so we're seeing very, very similar evolution here in digital assets. And I think we can help evolve and really bridge the gap between digital assets and the clients that are participating in digital assets and institutional trading, and like allowing institutions to actually participate and take a major role in the adoption of digital assets.
Yeah, that's great. And Joel, how about you? What interested you in blockchain and crypto?
Similar to Anton, there were a couple of reasons, starting with a background in capital markets. I guess now 28 years I've been involved in capital markets. And it is the first time in my career where I've had an opportunity to be part of an entirely new asset class and very exciting technology that's creating this opportunity. And along with my co-founders who also come from traditional investment management and wealth management backgrounds, we really look at this as an opportunity to bring traditional clarity and regulatory framework, legal framework that investors expect in traditional asset classes. We saw this as an opportunity to bring that to this exciting new asset class. The second reason really was we're based in Jackson Hole, Wyoming. As you and your listeners might know, Wyoming, the legislature here and the regulators here have been quite progressive around blockchain and digital asset legislation. And I've been fortunate enough to be a part of that. I sit on the select committee of the Wyoming legislature for blockchain and financial technology. And so I've been part of Wyoming advancing as the first state with a comprehensive legal and regulatory framework to address digital assets. And so far, the only state to clarify the legal status of digital assets as property within our commercial laws, our UCC. That's been a motivating factor for us as well.
That's great. And Christine, Fidelity.
Yeah, and this will sound vaguely familiar. I too came from capital markets. So having spent 30 years in traditional capital markets, and the latter half of my career kind of focused on the electronification of the equities business, it was just a great experience to go from being a really creative, disruptive force to intense competition and then essentially full-on commoditization in a period of, say, 10 to 15 years. I have to say that the full-on commoditization was a lot less fun than the competition or the creativity. And I think that's what led me to the digital markets. I think I took a look at the level of kind of lack of transparency, overall dysfunction kind of in the markets and said, maybe there's something that I could potentially bring to the table. That's what brought me to the market. But what's kept me here is really that broader global macro narrative that's taken place and empowering other entities, whether they're our custody clients or our execution services clients, to implement strategies that suit their clients within this growing asset class. So it's really about being a technology provider, like Talos is a technology provider, but also being a bridge to both traditional and digital markets. And that is what we find pretty fascinating at Fidelity. Incidentally, we approached the space, back in 2014, we began to mine cryptocurrencies. And when we looked at the space, we didn't see anyone that kind of met our risk requirements, didn't look like us. And when we approached the space from a commercial perspective, we heavily weighed being either a retail provider or an institutional provider. And it was really clear that the gaps on the institutional side were really substantial. And so really pleased that we made the decision to pursue becoming that institutional standard within digital assets. So we're really glad to be here.
So one of the things that each of you referenced is asset class. So I'm curious from your vantage points, and it'd be great to hear from all three of you on this. What is it that makes this different as an asset class as compared to other asset classes? Is it the technology? Is it something different? I guess I don't want to presume one way or the other, but it'd be great to hear what is distinct. Not just because one thing you say it's an asset class, but okay, well, why is this asset class different? What makes it distinctive? I think it'd be really interesting to hear your vantage points on that question.
Look, I think from our perspective, it's an asset class because of the underlying technology, so the blockchain technology and the transparency that blockchain, that distributed ledger provides. And then I also think that we're not just talking about one asset or one use case. We're talking about a vibrant ecosystem of lots of different use cases, whether it's the tokenization of real world assets, using cryptocurrencies as payment mechanisms, or even an emerging use case like decentralized finance. That's why we consider this an ecosystem. We consider this an asset class, and we consider the technology and the infrastructure that supports it to be really the type of work that we want to provide for the next several decades. So we view it as an asset class because it's diverse, it's unique, and it does not necessarily kind of fit into any other bucket. Like, does it neatly fit into foreign exchange? Does it neatly fit into kind of credit? But there are elements of every asset class that are present in digital assets.
Yeah, I mean, I tend to agree with that completely. I think that that's how we look at it. And I think that when looking at first of all, the collection, it really, digital assets represent an umbrella of assets that all have very, very different properties on its own. So it's really like a group of assets, but there's a couple of like key things that unite all of them, right? The underlying technology that is for the first time ever actually built into the asset class provides capabilities that are not available across the board in capital markets. In digital assets, with digital assets, we can do things today that we could not even dream of in capital markets. We can clear and settle. We can actually send capital from here to the other side of the globe within 15 minutes. Those are not capabilities we really ever had before. So in terms of capabilities and technology underlying, it is a paradigm shift that is very, very different. There's also other implications to things like portfolio construction. It's really still the testing ground, and the thesis need to be tested and questions and tested and proven. But we are seeing an uncorrelated return that is attributing itself very nicely to diversification in portfolio construction, which again pivots this as almost like a outside category to anything that currently exists in more traditional markets. So there's quite a lot of different properties by which you can say like a collection of those attributes to it being called a separate class of assets, or rather or an asset class.
So one of the things that I think all of you mentioned is what I will loosely call infrastructure here. And I think as an asset class relying on a new infrastructure, one of the areas that a lot of people are also talking about is how the blockchain infrastructure might become the infrastructure for existing asset classes. How are you all thinking about that sort of convergence of asset classes based on the underlying technology as opposed to an asset class that is completely separate?
I'll jump in because I have a very real world anecdotal comparison that because we bridge between both traditional and digital assets for our clients on a sort of ongoing daily basis, we're dealing in the traditional markets, buying and selling equities or allocating to private equity firms, and at the same time, for example, buying Bitcoin. We happen to utilize both Fidelity, Christine's firm, and Talos, Anton's firm, as partners of ours. And it is a incredibly stark difference to purchase Bitcoin for someone to go through the authentication and storage technology that exists for this platform and trade through Anton's platform and have not only the trade executed, but settled with confirms, oftentimes in a matter of minutes. And then on the other side, we're calling the bank to make sure the wire went out. Someone else on the other end is calling their bank to see if the wire was received. Sometimes it is, sometimes it isn't. It can take a lot of time for trades to get sorted out and then up to T+2 for them to settle. And for us to sort of compare the two processes, it's a head scratcher why everything hasn't been migrating already more rapidly onto blockchain or something like it.
Yeah. Thanks a lot for the kind words. And you guys have been awesome to work with and to go through this build-up process too. I mean, I think that that's exactly it, right? I think that if you're asking how this new technology can help existing asset classes, our idea, and really everybody that's building right now in digital assets, the idea is to use this tech without forcing this tech down people's throats, right? Get to the point where we can really seamlessly integrate using this new technology, using these new capabilities, and kind of like have the benefits effectively go to the other asset classes as well. As a result of that, like the real world here is that when we look at digital assets and we see what's going on here, a lot of the people, especially in traditional world, are looking at it almost like as a test bed, as a very, very quick iterative loop that allows us to test new ideas, to deploy new ideas. There's quite a lot of exciting new advancements that never ever happened before in capital markets. We talk about DeFi. We can talk about a lot of different things that happen. And of course, on the clearing and settlement layer, we're getting to the point where we can test things very rapidly in digital assets. And already there's a lot of things that are starting to migrate over to the other asset classes. The most common example is, there's actually two that come to mind. One is, of course, FX is moving more and more to the 24/7 trade lifecycle, which is not great if you're, by the way, operating a trading technology firm, because you kind of have to be thinking about this all the time. But it does create for a more effective market. And then, we're thinking about real-time settlement for the first time. And that goes directly to Joel's point around T+2, T+3. And of course, that talks about capital efficiency overall in the market. And what we've seen in the past couple of weeks happened with the GME stock and the clearing houses and getting involved with people learning all of a sudden what it is to have a delayed settlement. I think those kind of changes, the technology, blockchain technology, and generally some of the experiments that are being run right now in digital assets can actually change fundamentally how, financial markets work going forward. And we're really, really excited to see that happen.
Yeah, I absolutely think it's remarkable. And I think we have some really concrete, real near-term examples. But then when I think about what the possibilities are for us to leverage this technology in a different direction, I think about one of the most perfect examples of leveraging real-world assets is, if you knew where the 2nd Avenue subway was going to be extended and you wanted to purchase real estate associated with that extension, you really couldn't do it now. If those assets were tokenized or part of a distributed ledger, you could construct a portfolio of those types of assets in about 10 minutes. And so you think about the opportunities there beyond what we see today in terms of settlement infrastructure. You think about the potential for the democratization of these assets. These are really powerful things.
You all make great points here. These are all points around how different things that have existed for a while are going to get disrupted. Do you all see pushback against this? Or is this just going to be part of the natural evolution of things and people will have to learn to live with it?
Look, I think disruption happens in stages. And while I think this technology is transformational, there are certain frictions, even with acquiring digital assets. So we're still talking about digital bearer assets. So custody is part of the value proposition and it's part of the overall infrastructure. What we're trying to do at Fidelity is extrapolate what's unique about digital assets and kind of take that burden away from our clients and manage that operationally and efficiently with robust risk management so that we're not thinking about that as a risk in terms of interacting in the ecosystem. So when I think about is there pushback? There's pushback because it's new and because it potentially, interaction in this environment potentially involves someone to think about how they're managing risk across a new set of challenges, but with the help of folks like Anton and Joel and Fidelity, we're comprehensively looking at the risks that are present and helping to mitigate them. So this is why the infrastructure piece is so critical.
So Joel and Anton, to pick up on that and something else that each of you said, including Christine a few moments ago, is in terms of the promise, in terms of the potential, whether it's with respect to digital assets themselves, or it's using the underlying blockchain technology to enhance, evolve, maybe more than just enhance and evolve the infrastructure for quote unquote traditional asset classes. What are the biggest hindrances? What are the things that are keeping that from happening if you think that the pace of that is slower than is optimal or slower than you would have expected or perhaps just slower than you would like? What are the hindrances and any suggestions for how to overcome those hindrances, those challenges?
Yeah, I think that there are quite a lot of challenges, and I think they are being addressed a lot faster than, honestly, a lot of us expected. I think that firms like Joel's and Christine's are actually working to provide the real building blocks, and we're in that game as well, right? We need to get to the point where these changes to either using this particular asset class or actually changes in technology and to the workflow of more traditional asset classes are still meeting the high bar that are set by the clients, who are usually institutional clients, by the regulators. So we need to get to the point where the infrastructure is more mature. And right now there are still quite a few challenges across the infrastructure space. Just talking about digital assets alone, right? I mean, we are talking about quite a lot of fragmentation of liquidity. Some of the challenges are around the variance in technical capabilities in the service layer between the providers of liquidity. Some were built from the retail side, from the ground up, and then some were built by more institutional players. So that's kind of like players. So the diversity there is pretty varying, and that's not usually something that larger institutional firms are dealing with. So creating an envelope that allows them to interact with the underlying assets through this kind of like more high-grade, institutional-grade infrastructure is addressing some of the challenges. But again, the other aspect is, of course, for every single one of those steps in a typical workflow that an institutional firm is interacting with, you have to have good solutions. So if you really try to dissect it and you say like, well, maybe we focus on an investment workflow, usually that means some sort of an investment thesis that requires to have a lot of good data, really to have that kind of like pre-trade analysis that allows an organization to get into and formulate an investment thesis. There's the trade execution tools. There are things like post-trade reporting, clearing, settlement, capital efficiency, lending and borrowing. Custody, of course, is a major piece there too, right? So the way capital markets evolved is you evolve these kind of verticals and you start providing really good services across those verticals, and then you start collecting them and you're starting to kind of like glue all those services together and create this uniform, coherent work life cycle, right? And that's, I think that those are some of the challenges, is that we need to get to the point where it gets almost seamless for institutions to interact with the underlying asset classes through the prism of digital assets. And of course, it's easier to audit. It's easier to do back office. It's also easier to regulate. And the regulator has all the tools that are required for them to make the right decisions around how this involves and how do you protect the investors with it.
Yeah, I'm 100% in agreement with everything that you said. I also think you're right. The space is really evolving very quickly, but it's evolving where there's some fundamental building blocks that are missing, which is a lack of connectivity among these fragmented markets. So none of these markets are kind of communicating with each other. We're relying on players like Anton's, like Talos, to begin to stitch together that ecosystem, so to provide that seamless infrastructure or that known or expected outcome in terms of kind of the trading experience. And then when we think about that vertical, we think about how trading fits in with settlement and custody and delivery of solutions. We talk also about this as a highly capitally inefficient way of trading as well. You're pre-funding on multiple exchanges in order to execute. Those things are beginning to change, but they're beginning to change based on client demand. It is really about us as providers, infrastructure providers, to help ease the client friction. So identify that friction, provide a solution, and then work together. That's the critical piece. One of the key pieces in this ecosystem, and I think this is what I find most appealing about crypto or digital assets, is that we have these strong subject matter experts that are building really strong products in one vertical. If we're arguably saying that Fidelity is a strong vertical in custody, we may be partnering with Anton to build an even stronger infrastructure in terms of settlement. So what we're trying to do is, if we don't have the capability, we'll partner with someone else to deliver it. So I think that's probably my favorite thing about this industry, the highly collaborative nature of the really strong verticals that are coming together.
And just one quick, Christine, follow-up on that, which is it more challenging, and this may be an unfair question, but is it more challenging to find a technology solution to whatever it is? Or is it more challenging to find a solution that the regulators will sign off on?
That's a great question. I think the regulators are generally really well informed about the current state of the ecosystem. I think they have a vested interest in helping us get it right. But I do agree with you. I think there is kind of a lack of clarity as to where the line is in terms of the domain of any particular regulator. So I do think that creates kind of ambiguity. And let's take the custody rule. So the custody rule, it exists. Registered investment advisors are kind of obligated to the custody rule. there's still a fair amount of ambiguity as to whether it applies to Bitcoin. So if Bitcoin's not a security, then does the custody rule apply to Bitcoin custody? It's open to interpretation. So I would agree with you. I think it's probably easier to build a technical solution or a workflow or operational solution rather than creating one that's sound from a regulatory place. Sad but true.
From the perspective of Two Ocean Trust, I would say that we have a separate set of issues that we're facing. We benefit from the collaboration that Christine was talking about and the technology infrastructure that Fidelity and Talos have built. And so we sort of rely on their infrastructure and their technology. We're sort of back a little bit further in the curve in that we're at the intersection of this technology and this emerging regulatory clarity and trying to pull along our clients, the high net worth individuals and the family offices who have high expectations of how their assets will be treated from a legal and a regulatory perspective. Can they integrate in traditional trust and estate planning strategies with this asset and do so in a way where they're not exposing themselves to any additional risk than they would otherwise be doing with traditional assets?
So in terms of the level of collaboration, I think all three of you have used that word several times now. And I sort of understand it in the sense of, hey, you all are in different places in the space. And so you're all supporting each other from a business standpoint and doing business with each other. But what else is going on with collaboration such that it's something you all keep mentioning?
Yeah, it's a very interesting question, because I think that that's one of the most unique things about digital assets and the evolution of this asset class as a whole. It's true that, particularly on this call, we have very complementary roles that we play in the ecosystem, all three of us. But actually what you see here is what you don't see a lot in capital markets. You actually see collaboration even with players that are competing head to head. Because I think right now the understanding across the asset class is that we're all here to make sure this thing picks up and it's real and it's used by institutional owners, actual adoption, and it matures to the level where it is considered as mature as other assets. And so quite a lot of people are collaborating. Quite a lot of people are focused on growing the pie rather than taking a portion of it. And that's one of the most wonderful things. There's the conversations here are night and day compared to the conversations with capital markets. There's a lot less competitiveness in nature, but rather collaboration. And it's one of the more pleasant things in the asset class because it just makes your job a lot easier when you can openly talk about everything and kind of figure out how to work with other players, even if potentially down the line or immediately they are right out competing with you. It's just super collaborative space. But outside of that, collaborating with people like Two Ocean, like Fidelity is a pleasure because those are the individuals that came from capital markets, have tons and tons of experience, and have really the drive to move things forward here. So people are really after the same thing. It just makes things a lot easier. It makes progress a lot faster. It makes conversation a lot more pleasant. And it makes your day to day, despite the fact that, the asset is completely crazy, right? Things are moving very, very fast. The risk makes for very long days. It makes for those long days a lot nicer than they would have been otherwise.
And, I will add to that. I think we love the collaboration. We love that we're bringing kind of new thoughts to an emerging ecosystem. So we're all building together. But when we think about things, we think about what are the needs of the client? How can we collectively solve this problem or this friction for that client? I think we frequently talk about, well, what do you think about this workflow? How might that work? Can we work on this? Can we work on this together? Do we collectively bring something to the table that can create a more comprehensive solution? And that's kind of the way things are happening, which is really, really refreshing, rather than someone just sitting in isolation with a whiteboard saying, I'm going to figure this all out myself, and presenting potentially an under-resourced solution to the marketplace or an MPV that probably wouldn't fly with institutions or the clients that we're interacting with.
We wouldn't have had the ability to add this asset class to our platform without the collaboration with Fidelity and others and Talos. And in fact, we wouldn't have been able to launch the platform we did if it if it were just 18 months previously. So it's existential for us. We need the partners that we have, and we're able to provide the solutions we do to our clients because of them.
I just wanted to add one more thing to directly to Joel's and Christine's points, right? The collaboration is not only with the other market players and market participants, right? It's also with the clients. The clients are very much in the same boat with us as providers, trying to move forward, trying to figure out like what this actually needs to look like. What do we still need to build? For us, it's been the easiest exercise ever to get feedback from our clients and start iterating on that feedback and building more functionality, building more features, releasing additional verticals. And it's also because the clients are as driven as the providers, which is, again, like a very rare thing. So I completely agree with that. It's not only the collaboration across the providers of technology and the services, but also the clients. And it's fascinating to see.
One of the things that'd be great to get your perspective on is, the 5, 10, 15, 20 years out perspective. Hard to know what's going to happen in the future, but given your vantage point, given what already has happened, given all the things that you all are working on, as a general matter, when it comes to blockchain, I guess we can broaden it out beyond crypto assets or just think about the technology as a whole. What's the future? What are things that you're particularly keeping an eye on, or that you're particularly looking forward to hopefully seeing from your vantage point when you look out several years from now?
I think the things that are exciting for us the most are we're rushing right now towards almost like getting in parity, especially when we're focused on digital assets, right? We're trying to get this asset class in parity with other traditional asset classes. But actually, the intent here, and part of the reason why we're all actually involved in this, is because we think we can do more. And I think that the technology that's underlying and the new workflows that we're creating that are being effectively tested right now in digital assets can impact a lot more than just the digital assets. And so what I'm looking forward to is getting to parity and going beyond very, very quickly. I'm looking at things like, first of all, for us personally, and this is going to be one of the key pillars for us in 2021 and 2022, we're looking to really start thinking about institutional trading, institutional connectivity and participation as a global exercise. Starting to think about how do you actually connect seamlessly the different geographies? How do you create this kind of like flow, this denser flow of trading and financial services across the world? And I think with this kind of technology underlying, we can finally start seriously thinking about this and really allowing it to be more efficient. I'm very, very passionate about it, and I'm very excited to see where that goes. But also we're seeing other tools. It's funny to say we're just starting when things have been going on for about 3 years. But if you think of DeFi and you actually think about the relative age of that with compares to the rest of the financial system, it's tiny. It literally just started. But we're already seeing use cases like the ability to make yield automatically, to be able to implement smart contracts that are effectively shortening quite a lot of different processes. And I think, again, in terms of efficiency, in terms of the kind of services that we can build on this, I'm very, very excited to see what else we can build once the foundations are there, once we're done with the building blocks and we kind of like go to the next level, to the services where services like 2Ocean live and beyond. Like, what can we do that is automated, that is going on a global scale? And I think that's one of the things that I'm most excited about, to see kind of like where we can go and where we can take this actually.
My answer is maybe the more boring part of what I expect to happen in the digital asset story. And I think as this asset class comes to age and is accepted more into the mainstream, investors are going to need to have the same kinds of structures in place to safeguard their assets that they expect and have with traditional asset classes. And this has not really existed historically. So if you think about what we spend a lot of our time helping clients with, which is applying traditional trust and estate strategies to this new asset class, there's almost a conflict between the self-sovereign nature of crypto assets and an innate feature of a trust that requires the asset holder give up control in order to take advantage of the benefits of trust and estate law. So for me, it will be self-sovereignty is great. Being your own bank is great. But I think as this asset class matures, a lot of what we're focusing on is going to become more and more important, which is helping clients create a succession plan around their crypto assets and ensure that those assets are not only safeguarded, but passed on to their rightful heirs in a safe and tax efficient manner.
I'll take a little bit from what Joel was saying and a little bit from what Anton was saying. I think, Joel, when I think about it, I think there are opportunities for us to kind of apply some of the principles of trust construction in a more technical way by leveraging some of this technology. And when I think about that, that's truly freeing. That enables someone to, instead of spinning up a trust in a month, maybe spinning up a trust structure that benefits a large family or a disabled individual fairly quickly, that gives them the flexibility and control over the assets, irrespective of the disposition of those assets. I think that's pretty cool. From what Anton was saying, we tend to look at the progress in DeFi as almost exclusively related to financial processes, given the fact that we all come from traditional finance. I think there is a way for us to take those learnings and those legitimate proof of concepts that are happening in front of us and potentially applying them to other industries as well. So we're starting to see the supply chain prove out. But I think there are other processes for assets that we haven't even thought about it, whether it's wine production and how we could make wine production more efficient, robust, trusted. It's an absolute, it's a developer's dream to think about how we could apply some of the technology that we're working on and leverage the infrastructure that we're building. So it's really freeing. And I truly think we will see central bank digital currencies in the next 2 years. And when you think about the role of the individual, the sovereign, in this interacting in this ecosystem, the possibilities are really dramatic.
I'm going to add to something Christine was saying and kind of build on. So what I was describing earlier is sort of the near term, what I'd expect to see, this intersection of traditional wealth management and this new asset class. But you could even play that forward a few years to Christine's point and think about in the context of the innovation that's coming out of DeFi right now. This could all be in a smart contract. The sort of trust and estate planning could all be software or an algorithm that triggers this all. So a lot of interesting opportunities ahead.
Yeah, and just to add on that, and that's it's a super interesting point, right? Because if you really think about the world and you start thinking about this as one potential that could happen, right? A lot of these processes, a lot of the portfolio construction, trust construction actually starts relying on a more technical solution like smart contracts. You also see the butterfly effect here and really the consequences of how everything else has to change to accommodate that kind of flow, right? So think about organizations like auditors, think about the regulators, think about any kind of organization that supports this kind of innovation. They also have to change as a result. They all have to change, right? So we're talking about auditors that will all of a sudden have a lot more developers on staff to be able to actually audit smart contracts and go through it. And that's not a trivial kind of loop. And so there's a lot of these kind of changes that all of a sudden start happening the minute you introduce quite a lot of technology into this equation. That's why I think we're going to be seeing a lot more gradual changes, but it's super exciting to see where things can end up using exactly this kind of way of thinking.
I think that's a great way for us to end the conversation. You all, this has been really interesting, both a little bit of looking backwards and sort of how we've got to where we are now, and a little bit of looking forwards as to what's to come. It sounds like you all think there are boundless possibilities here, which is really exciting.
Thanks, everyone.
Yeah,
thank you so much for having us.
Thanks for the opportunity.
Appreciate it.
All right, Lee, what'd you think?
Wow. They all have this sort of great way of making you feel like the future is both now and is exciting and yet to come. So I thought that was a really motivating conversation from my perspective to hear how they have built stuff and are continuing to build stuff and are excited to see what they're going to be able to build in the future. I thought it was great.
And one of the things I'd be curious to get your further thoughts on is at the end of the discussion, Christine was talking about the ways in which there are broader applications or potentially broader applications outside of financial services. And, you and I have had a lot of discussions about how you think about markets, what markets are, the building blocks of markets, et cetera. I'm curious, in light of what Christine was saying about the potential outside of financial services, if anything about that in particular caught your attention, given the thinking you've been doing on markets generally and advances in technology like blockchain.
I thought her comment was very insightful. And as you know, I think not enough people, particularly not enough policymakers and regulators are thinking about what this interconnected marketplace looks like that's being built. And, I have this DeFi presentation that I give at panels and webinars and stuff like that. And one of the big points that I make is we call it DeFi. We don't really mean that it's just decentralized trading on financial instruments. We mean it as in all kinds of different things are getting used for a wide variety of purposes that look financial in nature, but are not just purely financial. And I think there's this tendency of all of us who have capital markets backgrounds, and I'm guilty of this too, of financializing everything. We see marketplaces and we just think about how stocks trade or how foreign exchange trades or whatever. And there's no reason why the world can't move in that direction with regard to trading anything. It doesn't have to be a financial asset. I was joking around with some people the other day and I said, everybody talks about how you trade stock